Good morning, good morning, good morning. Welcome to today's morning blast. I'm rather sickly today. I feel worse today than I did yesterday. But anyway, enough about me. It's the morning blast. It's Wednesday, the 15th of October. You join myself and Mr. Michael Brown, where we will be doing a review of yesterday, a preview of today, and hopefully kickstart your trading day. But before we do, I will get the legals out of the way. Nothing discussed on this space or podcast session infers trading or investment advice or infers any kind of endorsement by PIQ, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown.
Well, a very good morning to Ryan. Good morning, everyone. Sorry to hear you're not feeling too well, but I guess we sort of all know why.
We crack on, mate. Well, I'm putting it down to the bugs on the plane is what I'm suggesting.
Ah, that old chestnut. Yeah,
Yeah,
good idea, mate. Good idea.
Probably picked up something from like someone with Ebola virus or something on the plane. You know how.
God. Are you sort of patient zero now? Is that what you're
Oh,
saying?
absolutely. Yeah, exactly that. But what's been occurring, my dear friend?
Yeah, indeed. It was quite a choppy and indecisive day yesterday, actually. We had some very, very shaky sentiment early doors. And at one point, the S&P was down by about 1.5%, the NASDAQ 100 down by about 2% right after the cash open yesterday afternoon. We then rebounded a little bit, ended up back in the green momentarily in terms of the S&P, but did end with relatively modest losses, with the S&P closing down by about 0.2%. And of course, this all comes as markets remain incredibly sensitive to incoming trade and tariff developments. Of course, as the threat of an additional 100% US tariff on Chinese imports continues to loom large as things stand. That is due to go into effect on the 1st of November. Although also, as things stand, that still looks very much as if it is a negotiating ploy as opposed to a realistic threat.
Yeah.
Nevertheless, as I was saying to clients yesterday, I think I put this out on Twitter as well, if you are running a book of any sort, you really have to hedge the risk anyway, even though we all know that it is a negotiating ploy and we all know that it probably won't happen. You equally don't want to be and probably can't be sat there on the 1st of November going, actually, no, Mr. Risk Manager, I didn't hedge the most obvious risk in the world.
It, right?
Despite the leader of the free world telling me what he was going to do.
Yeah, exactly that. You've got to play that downside just because you will look like a complete twat if you don't.
Yeah. Absolutely. And I think that's one of the reasons why we see the VIX remaining relatively elevated and north of the 20 mark, just because people are using options to hedge equity downside. I don't know what's happened to this show. We're sort of starting to sound intelligent.
Let's not get carried away.
Yeah, maybe we are sort of running before we can walk. Anyway, in terms of some of those trade headlines yesterday, specifically in terms of US-China, we had Reuters sources who were noting that China has been increasing its oversight of export licenses for rare earths since the start of last month. This has raised some questions and concerns as to whether Beijing has been looking to curb outbound flows of these rare earth exports before the new controls take effect, which are due to go into effect on the 8th of November. We also heard from President Trump yesterday talking trade with China. He said that we have to be careful with China, but I think the relationship with China will be fine, and that he has a great relationship with President Xi, but sometimes it gets testy. About 20 minutes after that, he's got the sort of mind of a hormonal teenager, the number of mood swings he's having here. 20 minutes after that, he put out on Truth that they are considering ending cooking oil trade with China. He said that China not buying US soybeans is an economically hostile act, and that the US are therefore considering trade measures towards China as retribution. They didn't actually announce any new measures, let me just stress that, and I think it probably pertains to the threat that was made at the back end of last week, but nonetheless, rhetoric remaining relatively tense between the two nations. Trump has also turned his attention to Spain, actually, on the trade front.
España.
Of course, well, indeed. Of course, Spain have been dragging their feet, should we say, on defence spending. I think they are the only member of NATO not to have explicitly committed to this 5% of GDP target in terms of defence spending. And actually, the Spanish argument is a relatively sound one, basically saying, well, we don't see why we should just commit to an arbitrary number if we're not actually going to get value from it. Nevertheless, try telling that to Trump, because he is now threatening the Spanish with tariffs over their lack of defence spending. I am not a lawyer, but I'm not entirely sure how that one would work, given that there is a deal between the US and the EU for a 15% tariff. I'm really not entirely sure you could levy something on Spanish imports outside of that, but nonetheless, something worth keeping a bit of an eye on. In terms of other bits and bobs from yesterday, just sticking with the political side of things in the States, the White House, according to Punchbowl, citing sources, they are reportedly preparing for, quote, a long shutdown and have found several new funding streams to keep critical programs online. Of course, the government shutdown now into its 15th day and with no sign of coming to an end anytime soon.
One thing to note on this, and I can't believe who it was a politician mentioned this yesterday, that America's still working. Nothing's really fallen apart from, say, okay, you could argue like BLS, etc., and data maybe, but the USA as a whole is still up and running. Things are still ticking over as normal. We're still getting stuff done in terms of trade stuff, etc. So, do they really need all of these hundreds of thousands of people that are being laid off? Are mass layoffs the next stage when politicians and Trump, who are looking to cut costs, turn around and say, well, actually, do you know what? We work fine without this department, or these two departments could be merged, etc., etc. So, potentially, that could be the next phase of this.
Yeah, no, that's a very good point. I think it was, drawing a parallel from that, I think it was Belgium, if our friend George is listening. Good morning to him.
Morning, George.
Belgium didn't have a government for something stupid. It was like 18 months or whatever. The world didn't stop spinning. The country seemed to function relatively fine.
Well, for Belgium.
Well, low bar.
Was it chocolate and pedos?
Oh, Christ. Oh, no. Oh, day two, and it's all descended. Right, I'm going to move very quickly on because that could go anywhere. Why I'm going to just talk about the Fed, because we heard from a couple of Fed members yesterday. Michelle Bowman, Fed governor, who is also in the running for Fed chair. She's on this list of 5 names that is sort of the ultimate shortlist. She was saying that she continues to see 2 more rate cuts before the end of the year. We also heard Fed Chair Powell yesterday. He confirmed that the outlook hasn't changed much since the September FOMC meeting, very much leaning into the idea that they will deliver cuts at each of the October and December meetings, 25 basis points at each of those. Powell was also saying that the Fed might end their balance sheet runoff in the coming months. There have been a couple of kind of funding pressures beginning to emerge in money markets in the US. I am not going to profess to be any sort of expert in that whatsoever, but all of the people who watch that very closely are starting to get a little bit concerned, which is probably why the Fed are potentially looking at slowing the pace of quantitative tightening. Away from that, and on this side of the pond, over in France, the Socialist Party, they have said that they are not going to vote in favour of a no-confidence motion in new Prime Minister Sébastien Lecornu. That means that he is probably going to be safe in his job for the time being. The concession that he had to give in order to get their vote is to delay pension reforms once more. Of course, this has been causing absolute outrage in France. Delaying that.
Let's be honest, that pension reforms and the pension age has been causing outrage in France for decades now. Quite.
That is very, very true. But delaying that yet again is certainly not going to help with the fiscal footing in France. But it does probably mean that the sort of, immediate fiscal crisis, for want of a better word, and political crisis has probably passed. The euro a bit firmer in reaction, euro dollar trading north of 116. And we also see the OAT Bund spread tightening below 80 basis points as well. So the market clearly cheering that news. Speaking of bunds, we had another weak German auction yesterday, a 2-year Schatz sale that was oversubscribed by 1.4 times, which is the lowest level since 2023. The reason why I bring this up is because over the last couple of weeks while Ryan was away, and I'm sure he was all over this from Vegas, we had 3 German auctions which were technically uncovered. Now, what that means is that if the Bundesbank, the German central bank, weren't retaining a proportion of those securities for operational reasons, which they always do, then there wouldn't have been enough bids from market participants to fully cover and soak up the issuance that Germany is putting out.
Well, one thing I will say is I do believe I was on the plane when I saw one that was only covered for 1.1 times. I think it's due to post actually. So technically, failed auctions in Germany.
Yeah, and that's 3 of them in the last sort of 2.5 weeks, which is obviously quite a concerning sign. It's not, I'm not going to sit here and say Armageddon's coming because of it, but it is nonetheless something to keep on the radar, particularly given the huge amount of supply that markets are going to have to absorb. France yesterday saying they've got a net 300 million euros that they need to issue. Goodness only knows how much Rachel Reeves is going to have to issue next year, depending on what she ends up doing. So yeah, it's certainly one to keep a very, very close eye on, given that just jitters around the fixed income space seem to be continuing. So that is something, of course, we will keep an eye on. We also had some German data yesterday, the latest ZEW sentiment surveys. They came in softer than expected. The expectations metric at 39.3, below the 41.1 consensus. The current situation figure, that came in at -80, which was well below the bottom of the forecast range and well below the prior -76.4. In terms of other bits and bobs from yesterday, we did have a few headlines in the AI space. Firstly, Broadcom, they are going to launch something called Thor Ultra AI.
All
This
right.
is well, yeah, exactly. This is a networking chip that is supposedly going to see them compete with NVIDIA. Also in the AI space, we had Oracle. Their Oracle Cloud division is going to deploy 50,000 AMD chips in the second half of 2026. And according to all of the people who watch this stuff very closely, this is the latest sign that cloud companies are increasingly offering AMD's GPUs as an alternative to NVIDIA's market-leading GPUs for artificial intelligence usage. If you haven't worked that out already, that was me reading someone else's quote. I
I
haven't
was going to
suddenly
say
become
there's
an
a quiz
expert
at the
on
end.
that. Yeah, indeed. In terms of other bits and bobs, earnings, we had earnings from some of the Wall Street banks yesterday. JP Morgan, Wells Fargo, Citi, Goldman Sachs, all delivering top and bottom line beats, but the shares were a little bit mixed, particularly in the case of Goldman and JP Morgan. There was a little bit of concern over credit quality and higher expenses among those two names. Sticking with corporate results, we had earnings from ASML this morning, actually, before the European Open. For those who are unfamiliar, ASML are like the very first leg in the sort of semiconductor chain. They're the ones who make the machines that make the chips that then go into AMD and NVIDIA and God knows whoever else. ASML's earnings were pretty solid, decent net profit beat, net order bookings above expectations, and they also upped their guidance in terms of Q4 revenue as well. And that is why one of the reasons why we see the tech sector on slightly steadier footing this morning. The Nasdaq future up by about 0.5%. And just two last things from me this morning. One, a little bit of a technical one. If you think back 2.5 years ago now to when Credit Suisse went
Oh, yes.
bankrupt,
Good point.
the Swiss government, well, I'm not going to say anything defamatory because we're not allowed to on this platform.
Are
But
we not? First
they
time
shall
heard
we
of it.
say they turned the capital structure of Credit Suisse upside down. And what I mean by
Yes.
that is typically when you look at the capital structure of business, the riskiest capital within that business is equity. So if a business goes to the wall, the equity holders get wiped out first. In the case of a bank, you then move into the bond part of the capital structure, and there are these things called COCOs, which are convertible conditional bonds, AT1s effectively, which are like a bond, also like equity, but they're basically the second thing to get wiped out if a bank goes to the wall. That's all you need to know in this case. The Swiss decided that they didn't want to do it that way. And when Credit Suisse went to the wall and UBS ended up absorbing them, they preserved the equity holders and wiped out the AT1 bondholders, to which all of the AT1 bondholders went, whoa, hang on a second, guys, that's not the right way of doing it. What the hell do you think you're doing? We're going to take you to court. We're going to go through a whole load of lawsuits. And yesterday, one of the Swiss courts ruled that actually this was completely wrong and they shouldn't have done that. And I quote from the judgment, the write-off of Credit Suisse AT1 capital instruments lacked legal basis. The Federal Administrative Court has therefore revoked FINMA's decree. What this means in practical terms is that this could be a real problem for someone. It could be a problem for UBS, or it could be a problem for the Swiss government, because all of these AT1 holders who have been incorrectly, as it turns out, wiped out, they are now going to be chasing compensation from
I
someone.
did hear
Rightly so. Go on.
yeah, I did hear a number of 19 billion bandied around, but I don't know how legit that is
Well,
and how.
I
Go
was
on.
just, I thought I heard 20, so that does sort of chime
Well, there
with
you
what
go.
I'd heard. The problem is if it does end up that UBS are on the hook for this, it's the latest thing in a long line of
Yeah.
issues for UBS. I mean, they're almost as much of a basket case as the folk they absorbed. One of the things UBS are very unhappy about at the moment is the need to raise additional capital and keep additional capital, because the Swiss government have raised their capital requirements on them. If the Swiss government then turn around and say, well, you've got to pay compensation to all the AT1 holders shareholders as well, I think it's a pretty safe bet that UBS are going to be running away from Zurich very, very quickly. Moving on, and last but I know is least from me for the time being, Pony AI, the morning blast's
Yeah.
favorite stock. They, of course, have an ADR listed in the United States, which, as everyone knows, is up 200% since April. They have also now been given the official nod to list in Hong Kong. So there will be an IPO coming there later in the year as she
And
gallops on to the upside.
and if anyone from Pony AI is listening, me and Michael are more than willing to be paid on a. We only fly business, by the way, but yeah, fly us out there. We'll ring the bell for you.
Yeah, I would love to do that. I think we've given them more publicity than anyone else.
I believe so. I've not seen them mentioned anywhere else bar ourselves.
Anyway, that's all from me for the time being.
Perfect. Well, thank you for that. So quite quickly now, I'll run through some overnight news headlines from our dear friend Zach on the overnight news roundup. Do follow him on Twitter, etc. Although he did warn me yesterday that unsure how long these are going to be lasting for because he is changing his hours and changing some workload, etc., etc. So we'll be pinging these out from somewhere else eventually when that time does come. But in the meantime, China's President Xi bets US economy can't handle trade war. China's leader Xi Jinping is betting the US economy can't absorb a prolonged trade conflict, according to people close to Beijing's decision making. China is holding a firm line with conviction that an escalating trade war will tank markets as it did in April after Trump's Liberation Day tariffs, prompting Beijing to hit back, expecting Trump will be forced to negotiate at the late October summit with Xi. Three supertankers, on separate notes, three supertankers headed for the Rizal port are now seeking alternative berths following US sanctions on the terminal that handles around 10% of China's oil imports. Jamie Dimon sees gold logic in volatile times. JP Morgan CEO Jamie Dimon said he sees some logic in owning gold while declining to say if it's overvalued after its historic run-up. To quote Jamie, "I'm not a gold buyer. It costs 4% to own it. It could easily go to 5,000 or 10,000 in environments like this. This is one of the few times in my life that it's semi-rational to have some in your portfolio," unquote. Trump said his...
Sorry, I was just on gold. I'll tell you who else was talking about gold yesterday.
Go on.
Pat Deely and Ben Shepherd on This Morning.
There's your top then.
Mid-morning magazine show.
Well, that's the top. There you go. Sell everything.
The best top signal you're ever going to get.
Better than cab drivers, let's be honest. What else we've got? Trump said his administration plans to produce a list on Friday of Democratic programs that will be closed due to the ongoing government shutdown. I think this kind of chimes in with what we were saying at the start of the show, where potentially they're looking to shut down and kind of wind down or kind of merge departments and programs that just really aren't adding any value. And we're seeing no difference now they've been closed.
It's interesting that this doesn't, because you would imagine if you're a Democrat lawmaker and you see Trump closing down all the pet projects that you've wanted to get into law for a number of years, you would imagine that would sort of give you a bit of a hurry up and make you come to the negotiating table. That's clearly the intention of it, but it just doesn't seem to be having that effect at all at the moment.
Not at all. And like I said yesterday, further we get through October and then November, the less likely people are going to want to come back before the New Year, Christmas break anyway.
Absolutely.
An interesting one to keep an eye on. Japan's political chaos eases bond concerns. Japan's first government bond sale since the ruling coalition crumbled due to firm demand as higher yields attracted investors, bringing comfort to global debt markets. A key demand gauge at the 20-year auction Wednesday exceeded its 12-month average, following two smooth offerings last week despite political turmoil. The head of Japan's main opposition parties are expected to discuss Wednesday whether they can close policy gaps and pick their own candidate for the premiership, although Parliamentary Scheduling Committee couldn't agree on holding a Prime Minister vote on October 21st, so still need to work out what date to do that on. China's deflation streak extends. China's deflation eased in September, but the pace of improvement is failing to halt the country's longest streak of the economy-wide price declines since market reforms in the late 1970s. Michael Brown remembers that well. Beijing ramped up yuan support Wednesday, underscoring its commitment to foreign exchange stability as the US trade war showed few signs of letting up. European economic distress deepens. Distress in Europe's retail and consumer goods sector stands above levels seen during the 2009 global financial crisis. That's according to law firm Weil Gotshal Mange. That's
expertly pronounced. Well done.
Thank you, mate. That's their proprietary index. Yeah. Quickly moving on. The UK UK Chancellor Reeves told Sky News she's looking at both tax rises and spending cuts in the budget after being briefed on the black hole scale by the OBR. The number of UK house builders is in decline for the first time in a decade as slumping demand threatens government plans to build 1.5 billion homes. Just on this, the Labour Party, this whole build, baby, build and all that crap, they're building absolutely bugger all houses. And it's, when you've got house builders themselves actually kind of shutting down because of the lack of building, it just shows what absolute bollocks the Labour are talking about, especially when they then go on air and say they are doing the things that they're blatantly not doing. So, yeah, at least...
But having said that, I completely agree with what you're saying, but don't think that you should be going short house builders because you'll just end up going off your nut trying to close that out.
Oh, exactly. You can't work it on the book or anything. But anyway, moving on. Central banks signal divergent paths. RBA's Hunter, obviously Australian Central Bank, Hunter says Australia's underlying inflation in Q3 is likely stronger than the Reserve Bank anticipated, signalling tight labour market and economic conditions with a more hawkish message. Meanwhile, his New Zealand counterpart, Conway, said New Zealand's 2.5% official cash rate was at the lower end of its neutral range, but the committee is open to further cuts if necessary. And meanwhile, then moving on to the ECB, Makhlouf dismissed concerns about inflation dropping below 2%, saying he's actually more worried it will come in above that threshold. That's according to Bloomberg. Geopolitical news, Ukraine support ramps up amid Russian build-up. The UK and Canada will join the EU plan to tap a portion of almost $300 billion in Russian central bank assets held by G7 nations to ramp up Ukrainian financial support. Ukrainian officials are frustrated with a surge in foreign components in Russian drones, with a senior diplomat calling on allies to tighten sanction controls on Moscow scales up military production. Finland's defense minister said that Russia will continue to be a major NATO threat after the Ukrainian war ends, noting a new build-up of Russian